people of Britain voted to leave the European Union.
The Article 50 process is now underway, and in accordance with the wishes of the British people, the United Kingdom is leaving the European Union. This is an historic moment from which there can be no turning back. I have just chaired a meeting of the Cabinet where we agreed that the government should call a general election to be held on the 8th of June.
Normally, one would imagine that the betting markets should usually be the most accurate predictor in terms of the probable outcomes of events such as elections, given that there is nothing that focuses one's mind more than putting one's money where one's mouth is, which clearly the pollsters never do, given that they tend to be consistently wrong and tend to publish polls that range all over the place, so that after the fact they can point to an outlier poll to imply that they got the election result right, when in reality they most definitely got it very badly wrong. However, the bookies and betting markets have been just as wrong as the pollsters for several major elections, i.e. for the September 2014 Scottish Independence Referendum, to the UK 2015 general election, to the 2016 EU Referendum, and of course were badly wrong for Trump. The obvious reason why the bookies have also been getting elections wrong is that the betting markets are heavily influenced by the pollsters. So in my latest analysis in this Brexit general election series, I will take a look at what the betting markets are saying in terms of the most probable election outcome, given that the polls are literally gyrating all over the place. Firstly, here's a clip from the 2016 EU Referendum BBC coverage that plays from showing the betting markets had remained winning even 3 hours after the polls closed, with Leave odds as high as 14 to 1, which would convert a £100 bet on Leave into a £1,300 profit.
We're just talking about betting here. You're a famous betting man. Did you bet?
The market I trust most of all is not your parade of first-class sophologists like John Curtis. It's the exchange betting market, which is people have exchanged now £82 million in real money. And on that exchange market, it's come in. I mean, Leave has come in from 14 to 1 to about 7 to 4 in the course of the last 2 hours. But it's still staying as the favourite in that market. So David, if he absolutely believes it's going to be a Leave, he can now finance his leadership campaign for the Conservative Party.
And are you still putting money on?
Well, no, I've always said I never bet on things that I set my heart on because it clouds your judgment. So I'm very fond of men. So I think the horses are much more reliable.
And you can set
betting.
You can set your heart on a horse, surely.
Well,
let's get back to serious. Let's get back to serious.
I put 200 on this afternoon, but mostly, I must admit, because I was so irritated by my colleagues in the Leave campaign saying, we're going to lose.
No, they had to get somebody to tell them how to write a betting slip.
Yes, I'm hopeless at it.
And likewise, the bookies and betting markets got the US presidential election very, very badly wrong, as this clip illustrates. Firstly, the betting markets. The chart says it all. The betting markets were strongly discounting a Hillary Clinton win, not just on Brexit night but for the duration of the election campaign. Trump's best price was 2.9 on the day before the first debate. However, as the chart shows, you could have easily picked up a price of 6 or better for several weeks, even on the days of the polls closed, which actually stood at 6.6 1 hour before the polls closed. For instance, if one placed a £100 bet on Trump at 6.6, and if he won, that would have resulted in a profit of £560 plus stake, whilst a £100 bet on Hillary would have yielded a profit of just £16 if she had won, which illustrates that the betting markets were very strongly discounting a Hillary Clinton win, and thus were set up for a huge shock. So, following my forecast conclusion of 25th of September that Trump would win, I started to accumulate a betting position on Trump, having learned the lesson from Brexit, that Trump as the underdog meant that the betting price would significantly widen closer to election day, so I thus scaled into my position. The initial price was not so good at 3.05, but I knew to expect better prices over the following 6 weeks as transpired. I added more on the 27th of September and again on the 8th of October. In fact, the worse Trump standing in the polls got, the more Trump bets I bought. By the 7th of November, Trump was trading at 6.4 again, and it was my intention to buy some more Trump, but I delayed acting on my decision for a few hours, and so the price I got was only 5.6, which left a bitter taste in my mouth because I should have bought Trump at 6.4. So by election night, about an hour and a half before the polls closed, I saw Trump trading at 6.4 again, and I just could not resist adding to my now sizable position, so that this was my 8th and last bet on Trump at 6.4 about 1 hour before the polls closed. My betting record illustrates two key aspects of my analysis. That is, firstly, I put my money where my mouth is. If I forecast XYZ is going to happen, then I'm going to win or lose money on the basis of that outcome. And there is nothing that focuses one's mind more than having one's own money on the line, which is why I tend to get obsessive on a particular market for a period of time rather than flip-flopping all over the place. I focus on one market at a time because I want to win money on it. And you can't do that if you're jumping around like a rabbit all over the place. Election focus, block everything else out. My focus is to maximize profit on this election. Therefore, in this analysis, I'm not just looking for what the bookies are stating is the most probable, but whether there are any opportunities for a huge risk versus reward scenario, as has been the case for every major election since 2015. So, we turn first to the spread betting markets. According to the spread betting markets, such as IG Index amongst many others, the Tories peaked in early May on 404 seats and have now fallen to 368 seats. And if the downtrend trend trajectory continues, then would target around 359 seats by June the 8th. Whilst Labour's low point was on the 5th of May at 147 seats. That has now risen to 198 seats, and where if the trend trajectory continued for the remaining 6 days, then Labour could achieve 209 seats by June 8th. So the spread betting markets are forecasting a Conservative election win on an increased majority of about 68, whilst the spread markets have the S&P trading on 47.5 seats and the Lib Dems on 12. The Betfair market clearly very strongly favours a Conservative election victory, trading on just 1.23, whilst Labour is trading on 24, where if a Labour win was possible would present a huge profit potential. In terms of the number of seats, the Betfair market favours 350 to 399 seats for the Tories, which could offer some profit potential given the spread bettors are trading near the midpoint of the range at around 370 seats. Whilst Labour is trading on a knife edge of just above or below 200 seats. The overall impression is that the betting markets are targeting a forecast Conservative total of between 355 and 375 seats, and Labour on between 190 and 210 seats, thus strongly implying that Theresa May will win the election with an increased majority of about 80 seats, which is contrary to recent polls such as by YouGov. So ensure you're subscribed to this YouTube channel for the next analysis in this series as I count down to my UK general election 2017 final forecast conclusion.